What happened to the stock and bond markets this past Wednesday? Well, the Treasury had a very disappointing auction of long bonds, and the Fed's Chairman Powell made very hawkish comments about potentially raising rates again if needed. So what happened that day, the following 2 days, and how did things turn out for the week? Well, last week I said, so you've got rising confidence, a rising bottom confirmation level, and a rising market. This tells me we're going higher next week. And as you'll see, that's exactly what happened. Link in the pinned comments below. So if we take a look at the past week, you can see we had a fairly rocky ride here, but in general, for the larger cap stock indices like the NASDAQ 100, the S&P, and the Dow, they all finished the week higher, with ARK and small caps finishing lower. And you can see what happened back here on Wednesday when the Fed made hawkish comments and the Treasury auction didn't go so well. The smaller, riskier assets like ARK and small caps really dropped off. Now you can see the NASDAQ and the S&P and the Dow also pulled back, but then came roaring back on Friday. So in general, a very healthy up week. And where are we over the past month? Well, you can see after bottoming out here, things really came roaring back, and we're in a fairly healthy uptrend here. How about year to date? Well, year to date, you can see we had a very well-formed bottom here, a rocket ship up off of that bottom. That's very indicative of a really good, strong bottom, and hopefully this trend will continue. And how do the bottom dynamics look? Well, if we take a look at the bottom dynamics, you'll remember from last week I talked about having a very strong bottom forming indication. This orange line is a bottom forming indicator, along with high confidence level here. So we certainly had a bottom forming indication here. We actually had another one back here. And then what happened? Well, that was followed by a bottom confirmation. The blue line shot way up here. Confidence level went back up to a very high level, and we had a very nice, strong bottom confirmation here. And as you can see, the markets kind of went sideways a little bit, but finished up higher, at least for the S&P 500. Now, looking at this going forward, I don't like to predict things when the bottom confirmation is flat and the bottom forming indication is flat. We do have a very high, although somewhat falling confidence level here. This is a tough one. I mean, given that this is still very high with a high confidence level, I'd be inclined to say I think we're going higher next week, but not totally comfortable with that. And what about risk versus opportunity? Well, if we take a look at risk versus opportunity, you can see we had a situation here last week where we were right at this point. Both of these were rocket shipping higher, and it gave me a little pause for concern. But as you remember in the last video, I said, but I'm going to go with the bottom dynamics, which ended up being the right call. Now you can see these have peaked out, and in fact, the acceleration, which is a little tough to see behind the S&P 500 here, you can see that it's backed off of its high. So this is good, and you can see that the opportunity level has been trending higher, also good. So I would say this looks pretty good going forward. And what about equity versus safety? Well, if we take a look at equity versus safety, you can see we've had a lot of movement here this last week. In fact, we've pretty much flipped. Let's talk about it. So let's follow the NASDAQ 100 as we always do. And you can see this has been a wild ride, up to second place, down to ninth, back up to third place. This kind of volatility is really an indication that you're at or near a pivot point or a bottom. And that's what we're seeing right now. Now, if we take a look at cash, you can see that cash was stubbornly up here in first place, came back sort of to second, and now has fallen to fourth. And I'll talk a little bit more about cash later. And then if we look at small caps, you can see there's no appetite for the highest risk assets right now, which is giving me a little bit of concern. Now, when we see this start to pivot and go higher, and the NASDAQ stays up near the top, then I think we're past any reason to worry. But now let's take a look at safe assets. So you can see here the cash has fallen to fourth. But what I really like here is that the treasuries overall are starting to look healthy. So let's look at the next slide. So if we look at short duration cash, intermediate duration treasuries, and short duration treasuries, the only thing I don't like here is I'd like to see cash down here in 10th place instead of fourth. But what I really like here is you can see that the longest duration treasuries, EDV, have rocket shipped to first place. TLT is in second place. So in general, you have a very, very healthy looking treasury market here. The only caveat is I'd like to see cash down here below short-term treasuries. That would be, in my opinion, a totally healthy treasury market and a very healthy looking equity market. And how does this show up in the buying and selling pressure? Well, you can see that in the case of the Dow, the buying pressure, this gray line, is well above the selling pressure. And you can see we've had a nice upward move here. Same thing for the S&P 500, but the buying pressure is not caving here. It's staying very nicely high, even though it's rolling off a little bit. What about the NASDAQ 100? Rising buying pressure, rising prices. But now you can see with ARK Innovation, what we were seeing in the weekly performance, you can see that the buying pressure has collapsed, is almost about to cross the selling pressure. Selling pressure is moving higher, and the price is kind of waning here. And then we would expect to see the same thing with small caps, and in fact, we are. In fact, the price action's even worse than ARK Invest, and the buying pressure has already collapsed below the rising selling pressure. So this is not looking great for small caps. When we see this turn around, then I'll have even more confidence that we're past the bottom. And how do things look with sector rankings? Now remember, the rankings themselves are kind of giving a view in the rearview mirror. This is what's happened. They take a little bit of time to come around and show you where we're at. And you can see that we had consumer discretionary falling here. It's pulled back again. Consumer staples were up here kind of near the top, but they have somewhat backed off. Cash has moved up a tick. That doesn't look great. So this doesn't really look all that great. But remember, again, this is kind of looking in the rearview mirror. And I've shown you 5 weeks worth here, so you can get kind of a sense of how things are moving around. Well, let's just take a look at last week versus this week. Well, last week versus this week, you can see, of course, that consumer staples have fallen back. I actually view that as somewhat good because it means investors are potentially taking their money out of the safer consumer staples stocks and putting them in the more risky, for example, NASDAQ 100. Well, let's see. NASDAQ 100's here, and it moved up a tick. So, yeah, maybe that's happening here, which is a good sign. You can see consumer discretionary fell back one. That's not great. Innovation's stuck down here at the bottom. That's not great. And cash has moved up a little bit here. So that's not great. But now let's take a look at sector rank acceleration. Now we're looking at the change in the ranks here, which is really more telling. It's kind of an indication of where we're headed and not where we've been. But you can see even in this case, cash, while it bounced around here, it was way down here, way down here. It has moved up here into third place. That's not good. But you can also see consumer discretionary has moved up. You can see it was way down here, and it's been fighting back and moved up here. And consumer staples, which were in first place, have slid all the way back down here near the bottom. This looks great, except for cash being stubbornly up here. And if we look at last week versus this week, you can see that cash, yes, it did move up, but you can see that consumer discretionary has moved up. Consumer staples have collapsed down to here. And treasuries, the shorter duration treasuries, have moved down here. So this looks fairly healthy. And what about the NASDAQ 100? Well, you can see the NASDAQ 100 was down here last week, and it's moved all the way up here. This looks great. What about ARK Innovation? Where was that? ARK Innovation was here. It's moved up a tick. This is good. We've got emerging companies here, and it looks like one of them, the small caps, fell off. That makes sense given what we saw in the price action and the buying and selling pressure. But smaller emerging tech companies QQQJ went from here all the way up to here. This is starting to look like a healthy pivot toward risk in equities. And how have Treasuries done over the past week? Well, interesting. You can see exactly what happened here. On Wednesday, the Fed had some hawkish comments, and the 10-year Treasury auction didn't go well. And you can see the price of EDV and TLT absolutely collapsed here, absolutely just fell out of the sky. And then what happened the next day? They came back and finished higher. So for the week, this looks like a fairly healthy Treasury rally. And you saw that in equity versus safety as well. What about over the past month? Well, you can see just like equities, these bottomed out a little earlier back here, and they've been moving higher, which looks very healthy. And then if we look at year to date, you can see just like equities, we've had a very well-formed bottom here, and now we're rocket shipping higher, which is what you want to see coming off of a major bottom. This looks very good to me. So how does all of this show up in the buying and selling pressure for Treasuries? Well, if you take a look at the short end, the short duration Treasuries, you can see that the buying pressure has been falling and the price has been falling. And the selling pressure is starting to increase. Even though the buying pressure is still above the selling pressure, it looks like the selling pressure is going to head higher, which means there could be more pricing pressure here at the short end. What about intermediates? Well, intermediates, you can see the price has been a little wonky lately, but the buying pressure is still well above the selling pressure, even though it's somewhat collapsed here. What about 7 to 10-year Treasuries? The price doesn't look quite as wonky. It's still a little wonky, but the buying pressure is still well above the selling pressure. And then what about long bonds, 20-year Treasuries? You can see that the price action has actually been a little bit more positive in general, and the buying pressure is still above the selling pressure. So somewhat of a mixed picture here, but encouraging. I feel like I'm afraid. And what about gold? Well, yep. I think if you remember last week, I talked about the fact that gold didn't look so good. It was losing its luster. The buying pressure was falling. And you can see that the price has declined and as the selling pressure has increased here. So this doesn't look good for gold, but that says that investors are less weary of what's going on in the world. And clearly there's no sign of inflation if gold is dropping. So this should be good news for everybody, whether you're a bond or equity investor going forward. And how about Bitcoin? Wow, Bitcoin has been on a tear. You can see the buying pressure, this gray line, went through the roof, off the charts, pulled back and kind of corrected itself, and it's now heading higher again. And the price is also going off the chart. This is fabulous. And hopefully this trend will continue. And if you're holding Bitcoin, you're a happy camper. Look, equities and bonds are still showing signs of a turnaround, although the emphasis is still on large cap, lower risk equities in favor of small cap and ARK Invest. So investors are somewhat still a little timid. All eyes are going to be on the Consumer Price Index report coming out this Tuesday morning at 8:30 a.m. Eastern. But that could end up being just another news/noise event that doesn't have any lasting impact. That's why it's so important to be an investor and not a trader. Dollar cost average in and don't try to time the markets. Until next week, I'm Calvin Rose. And thank you for watching Invest Smarter. That's all for now.
So you wanna know my name? I hope you got a lot of time. I'm not sure what you've been told, but no one's been a friend of mine. From the day I drove the car to the riverbed, they'd never heard what I've said. So pardon me for acting wise. I know what hides behind those eyes. Where do we go when the fight comes knocking at our door? Where do we hide comes knocking at our door. Where do we hide?